Welcome to Way to Commerce. Subscribe to Way to Commerce. Today we discuss about types of audit. This is the unit 2, types of audit. So we can categorize types of audit as on the basis of ownership, on the basis of time, on the basis of objectives. So on the basis of ownership, the audit can be classified as proprietorship audit, second one partnership audit, third one companies audit, fourth one trust audit, fifth one cooperative societies audit, sixth one government departments audit. Second categorization on the basis of time: internal audit, financial audit, that means year end, third one continuous audit, fourth one balance sheet audit. On the basis of objectives, the audit can be classified as financial audit, internal audit, cost audit, tax audit, government audit, secretarial audit, independent audit, dependent audit. So these are the types of audit. So we can discuss in detail. First basis, on the basis of ownership. The audits can be further divided into, on the basis of ownership, first one, proprietorship audit. So here proprietorship audit, that means sole trading concerns. Proprietorship audits are done on the basis of request of the clients but not legally required. So proprietorship audits are done on the basis of request of the clients but not legally required. Managements can conduct these audits for internal use only. Generally, employees of the organization can conduct of these audits, or by others are called as private audits, because proprietorship concern is not legally established. So it's a voluntary institution. So proprietorship audit, not legally established. That's why there is no legal obligation to audit the financial statements of proprietary audit. So it's also called as private audits. Second one is partnership audit. Partnership audits are done on the basis of request of the clients but not legally required. So partnership also not legally established firm. The qualifications of an auditor may not consider on these types of audit. Generally, employees of the organization can conduct of these types of audits, or by others are called as private audits or voluntary audit. Next, third one, companies audit. Audit of company performed under statutory obligations made compulsory because company is established under the act. That's why audit of company performed under the statutory obligations made compulsory. The terms and procedures are given in the Companies Act 2013. On the basis of these provisions, the companies must conduct such audits. So the audit of the companies must be conducted by the following provisions of the Companies Act 2013. And also a qualified chartered accountant can eligible to accomplish the audit of the company. Next, fourth one, trust audit. Audit of trust performed under statutory regulations made compulsory. The terms and procedures are given in the acts. On the basis of these provisions, the trust must conduct such audits. Only a qualified chartered accountant can eligible to accomplish the audit of the trust, because trust also eligible under the Trust Act. So it's also legally established. That's why only a chartered accountant can eligible to accomplish the audit of the trust. Next, fifth one, cooperative societies audit. Audit of cooperative societies performed under statutory regulations made compulsory. It's also made compulsory. The terms and procedures are given in the Cooperative Societies Act 1912. On the basis of these provisions, the cooperative societies must conduct such audits. Only a qualified chartered accountant can eligible to accomplish the audit of the cooperative societies. Next, sixth one, government departments audit. Audit of government departments performed under the statutory regulations made compulsory by Comptroller and Auditor General of India, COG, C&AG. Next one, on the basis of time. So on the basis of time, the audit can be classified as interim audit. So an audit is performed in between two annual audits is considered as interim audit. So the audit performed between two annual audits is considered as interim audit. It can be conducted as quarterly or half yearly. Normally, this audit is conducted in the large companies. So in large companies, they provide quarterly or half yearly financial statements for taking decisions. That's why interim audit can be performed in larger companies where huge amount of transactions are available for audit work. The entire quarter's audit accumulates and finalizes the audit work. So ultimately, entire quarter's audit accumulates and finalizes the audit work. Second one, periodical audit or final audit or complete audit, that means at year end. Here the commencement of the audit work starts at the end of the financial year. After preparation of final accounts of the business, the auditor is called to conduct an audit. So after the preparation of final accounts of the business, the auditor is called to conduct an audit. Such type of audit is called final audit. Next one, continuous audit. A continuous audit is where the auditor and his staff are constantly engaged in checking the accounts during the entire financial period or at regular or irregular intervals during the period. So that means continuous audit is where the auditor and his staff are constantly engaged in checking the accounts during the entire financial period. So it continuous audit doing entire the year. Generally, large companies where bulk transactions were involved will be subject to continuous audit. So this is the important concept. That's why we discuss about advantages of continuous audit. So first one, complete checking of all the records can discover mistakes. So complete checking of all the records can discover mistakes. Second one, up-to-date accounts. Third one, moral check on employees. Fourth one, presentation of interim accounts helps in early detection of errors. So we can easily identify errors. Fifth one, early detection of frauds and errors and early presentation of accounts. Sixth one, valuable suggestions can be made by auditors. We can take early precautions. Seventh one, proper planning will be held due to this audit. Proper planning will be held due to this audit. Next, disadvantages of continuous audit. First one, alteration of figures. So if the auditor done his audit work, again the accountants may alter the figures of the accounts. So it's a continuous audit. Disadvantage. Next, second one, failure to keep track. Third one, dislocation of routine work. Fourth one, expensive. Fifth one, frequent visits, time consumption. Next, fourth type of audit is balance sheet audit. It is complete verification of all items presented in the balance sheet but not remaining. So balance sheet audit is complete verification of all the items presented in the balance sheet only, but not the remaining. The auditor investigates regarding materiality and statutory requirements. This type of audit is successful where the proper internal control system exists. Because under this type of audit, the auditor might not follow the elaborate checking of the transactions. So this audit applicable when investigates regarding materiality and statutory requirements. For example, accounting standards followed in the financial statements, that means in the balance sheet. For example, the building is properly valued, properly depreciated as per AS10, property, plant and equipment, so etc. Next, on the basis of objectives. So on the basis of objectives, the audit can be classified as, first one, financial audit. Financial audit is the examination of the books, accounts and vouchers of the business. The purpose is to satisfy that the balance sheet shows a true and fair view of the state of affairs of the business and the profit or loss derived by the business during the financial period. So financial audit, it is the examination of the books, accounts and vouchers of the business. So to show the true and fair view of the state of affairs. Next, second one, cost audit. Cost audit means verification and checking of the records of the cost of the manufacturing company and reveals whether the cost controls and techniques are properly working in the company. So first one is verification and checking the records of the cost of the manufacturing company and reveals whether the cost controls and techniques are properly working in the company. Cost audit helps to the management to reduce the cost of production. So it helps to the management to reduce the cost of production. Next, third one, tax audit. To determine the profit for the purpose of calculate taxation, the net profit given as per the profit and loss account should be adjusted in accordance with the provisions of the Income Tax Act 1961. Okay, tax audit. The procedure must be audited by the auditor for the purpose of checking the true and fair tax payment identification. The treatment is considered as tax audit. While the company pays tax, the tax department will not depend on financial statements. They prepare tax profit and loss account. So for the adjustment in accordance with the provisions of the Income Tax Act 1961. For example, the depreciation rate followed by the business is different with the provisions of Income Tax Act 1961. There must be adjustment to that depreciation as per the Act. So that's why they need to prepare a separate profit and loss account with adjustments of the provisions of the Income Tax Act 1961. So as per the provisions of the Income Tax 1961. So it is a tax audit. Next, fourth one, government audit. Audit of the transactions made by the government officials on behalf of the government. Thus the government need to know the payments are as per the rules of the government and all the payments are sanctioned by the proper authority. The government conducts this type of audit by Comptroller and Auditor General of India before or after sanction of the funds. So government audit is transactions made by the government officials on behalf of the government. Thus the government needs to know the payments are as per the rules of the government and all the payments are sanctioned by the proper authority. So the government audit is conducted by C&AG, that means Comptroller and Auditor General of India. Next, fifth one, secretarial audit. So secretarial audit is a mechanism to check the complaints of an organization to the laws, rules, regulations, notifications, etc. prevalent at the time of the audit. In this case, it is to check if the company has been complying with the provisions of the Companies Act 2013 and all of its rule therein. So secretarial audit ultimately about the provisions of the different laws, different rules, different regulations, notifications, etc. followed by the financial statements or followed by the companies. So they have to check. So this is the secretarial audit work. Next, sixth one, independent audit. This type of audit is performed by the external person, even he is not an employee of the company. The outside qualified professionals can reveals the mistakes and frauds of the employees. Then only the management can understand the performance of these employees. Seventh one, internal audit. It is a checking of the operations and records within a business by specially assigned staff. So internal auditors are the internal audit is conducted by the specially assigned staff. So internal audit is a systematic examination of the accounting transactions as well as that of the system according to which these have been recorded, with a view to reassuring the management that the accounts are being properly maintained and the system contains adequate safeguards to check out in conformity with the plans of the management. So internal audit is conducted by the assigned staff. So ultimately the main objective is accounts are being properly maintained and the system contains adequate safeguards. The internal system contains adequate safeguards to check out in conformity with the plans of the management. Subscribe to Way to Commerce. Thank you.